Now, the financial world is gearing up for the most anticipated interest rate hike in the history of the world, possibly.
The world is watching indeed, and the first move up in nearly a decade in the United States could cause ripple effects that affect our markets here in South Africa. Generally, the rand has been weaker this year because higher interest rates make the US more attractive for investors. Emerging markets like our own, already seen as riskier destinations, become less attractive. Up to 90% of investors expect a hike tonight, very shortly, which means that the markets may have already priced that in, and the rand could in fact strengthen on the news, but many more are bracing for volatility in the currency and significant weakening.
Let's take a look at the situation in the US right now. The last time that the Federal Reserve hiked rates was on June the 29th in 2006. The bank then cut rates to zero as the financial crisis engulfed the world. And that's where they've been for 8 years. Low interest rates helped American individuals and corporations, as well as the government, to borrow more easily and therefore spend to boost economic growth.
The so-called loose monetary policy was combined with quantitative easing, which pumped money not only into the United States, but encouraged investment across the globe, which was good for us here. Good for the JSE, and that means that's why we're worried if this money dries up. Well, for more on this story, we now cross live to our correspondent, Nick Harper in New York. Good evening to you, Nick. Is this rate hike in America seen as a fait accompli?
Well, pretty much, Francis, yes. Going into this, the thinking is very much that this will finally be the month when the Federal Reserve decides to raise interest rates. And I say finally because it's something that we've been talking about for months. Even before 2015, the Fed was saying that 2015 was likely to be the year that they would raise interest rates. So every single month when they've met, there's been speculation as to whether this would be the month. And it seems now that there is enough strong economic data in terms of the jobs market and the GDP here in the US to support the decision to raise interest rates. So with that strong economic data, with the markets doing well in the US, the feeling is that the Fed will finally push the button and go ahead with a rate rise.
I'm interested to know, do ordinary Americans understand the implications of this? Economic news often filled with jargon. It's hard to explain. Do you think the man on the street understands this, not only in America, but even in emerging markets like our own?
Well, I think here in the US, it is something that is being discussed widely in the media. So I think it's something that has certainly come to recognition amongst people, especially the average person on the street. And I think in many ways they do understand that there will be positive and negative benefits for themselves, because that's always where the average man on the street worries about this, how it will affect them themselves. Now, obviously, if they have a lot of money in savings, a better interest rate will mean that they will have a better return. However, if they've got things like a mortgage or large repayments to make on car loans or credit cards, that would be an adverse effect for them. And I think in many ways that's the way that people here in America are looking at it. In terms of the markets themselves, the thinking is that this rate rise has already been priced into the markets. It's been talked about for so long that the market has already overcome any potential rate rise. And going into this decision, which is going to happen in about 45 minutes' time, we should find out, the markets are by no means spooked. They are up. They are positive ahead of this potential rise.
We're hearing the same thing, a 25% basis point hike expected. So I guess there will be a shock on the markets if it's higher than that, or if there's no rate hike at all.
Well, yes, it would be a quarter-point rise. That is the thinking. And I think the Federal Reserve, in terms of the chairman, Janet Yellen, she'll very much want to stress when she holds a press conference after announcing the decision that any future rises will be gradual. A quarter point is thought to already have been priced into the markets. Now, if the Fed were to go ahead and raise interest rates by 0.5% here at this meeting, there probably would be something of a shock reaction from Wall Street, but also global markets as well. But if it's a quarter point, and also there's this emphasis of future rises being gradual, then there is likely to be less shocked. And as it's already been priced in, the hope is that it should be smooth sailing, even if the decision is to raise rates.
Okay, Nick, so explain what happens tonight. When will we actually hear the first decision and the first words from Janet Yellen herself?
So the Federal Reserve will put out a statement at 2 p.m. local time here. That's in just over 40 minutes' time from now. 30 minutes later, Janet Yellen holds a press conference. She runs through what has been outlined in the statement, but she also tries to give a bit more detail. And that's the time when investors and people who are interested in the money markets are very much looking for any sort of indication about what's going to happen from this point going forward. By that stage, we'll know whether or not there is a rate rise, but they'll be wanting to hear whether or not she's hinting at a potential future rise, and if she's hinting at it, how quickly it could come, because there is some speculation. If there is a rate rise of a quarter point today, there could be another 3 over the next 12 months, totaling a 1% rate rise during the course of a year. So lots of interest, and certainly many people will be listening for any potential hints of how things will play out over the coming months.
Indeed, and that will affect our own rand here in South Africa. Reacts. A lot of people will be looking at our own currency tonight to see if the dollar strengthens and the rand weakens and how bad that effect is. Thank you very much, Nick Harper from Washington.